Hey all, welcome to Share Trek. This is Raj here. Friends, today I want to talk about the debt ceiling which is fast approaching and also the status of the US dollar as a reserve currency and leading international currency. Let's get started. Welcome back. From an economic perspective, the debt ceiling is designed to be a constraint on the executive's ability to manage the US economy. New analysis by both the Congressional Budget Office and the US Department of Treasury suggests that the United States is rapidly approaching the date which the government can no longer pay its bills, also known as the X date. History is clear that even getting close to a breach of the US debt ceiling could cause significant disruptions to the financial markets that would damage the economic conditions faced by households and businesses. An actual breach of the US debt ceiling would likely cause severe damage to the US economy. Analysis by CEA and outside researchers illustrates that if the US government were to default on its obligation, whether to creditors, contractors, or citizens, the economy would quickly shift into reverse, with the depth of the losses a function of how long the breach lasted. A protracted default would likely lead to a severe damage to the economy, with job growth swinging from its current pace of robust gains to losses numbering in the millions. According to Treasury Secretary Janet Yellen, there's nothing more harmful to the U.S. dollar than failing to lift the debt ceiling. A government default would erode trust in the dollar, making borrowing more expensive in the U.S. and would also reshape international finance. The repeated debt ceiling drama could undermine the role of the dollar as a reserve currency, and that's my personal opinion. And the dollar is also used in transactions all over the world. So if the value of dollar fluctuates too much and there is no confidence in the currency, then it would become a problem for dollar to be as respected internationally as it is right now. If investors lose faith in the stability of the treasury assets due to the doubt perpetrated by debt ceiling breach, they might start looking for alternatives. A breach of the US debt ceiling could cause significant disruption to financial markets that would damage the economic conditions faced by households and businesses. Real-time data indicate that markets are already pricing in the political brinkmanship related to federal government default through higher risk premia. While White House economists have warned that a protracted debt default would cause the loss of more than 8 million jobs and cut the stock market in half, I think we already are suffering from a whiplash in the stock market. Many people have their portfolios in the red, and that's further going to get aggravated if the debt ceiling is not raised. Now, in terms of geopolitics, there are efforts to get out of the control of US dollar because the US has been using sanctions against many countries and also freezing assets. This has led to the search for alternative currency, especially among countries that have adversarial or less friendly relationship with the US. Now, friends, when we talk about trading in US dollars or having assets in US dollars, the whole book of records for US dollars is controlled by the US government. So when US imposes a sanction, immediately they can look at all the accounts of anyone who holds US dollars, and they can just say that the US dollars have been confiscated and that party no longer has the ability to use those US dollars. So whenever sanctions happen, people are afraid of not being able to trade their US dollars, not being able to use the US dollars they have to buy essentials and other things. So it's a matter of great concern for the rest of the world as US continues to increase the sanctions on various countries. The greater the number of countries targeted by the sanctions, the smaller the market for US goods and services and imports. Countries afraid of losing their assets are moving into gold as a reserve currency, among other things. The largest increase in gold recently has been with Singapore, China, Turkey, India, and the Czech Republic. There is talk of a BRICS currency with China playing the lead. I'll just show you the website which shows the gold currency reserves. We'll talk a little bit about that, then I'll resume my discussions on this topic. This is the website of the World Gold Council, where we can get information about central bank holding of gold. And they have got a chart out here, a snapshot of Q1 status of 2023 gold reserves in tons. And on the right side, we have this chart which shows green bars showing increase in gold holdings and red bars showing decrease in gold holdings. So if you see here, Singapore has increased its reserves of gold by 68.67 tons, and China has increased by 57.85 tons. Turkey, which is having a lot of inflation problem, has increased gold reserves by 30.21 tons, and India has increased it by 7.26 tons, and the Czech Republic has increased it by 1.54 tons. These are the top 5 countries who have increased their gold reserves. And if you look at the overall heat map, you'll see North America has got 8,133.46 tons of gold, and Western Europe, there's a breakup, but overall consolidated holding of entire Western Europe is 11,776.35 tons. So by far, Western Europe has the biggest reserve, followed by North America. And then we have Central and Eastern Europe, which accounts for 3,545 tons. And then we have East Asia, which accounts for 3,452.42 tons. And then, of course, we have got South Asia, which accounts for 881.77 tons, and Southeast Asia, which has got 794.33 tons, Middle East and North Africa totally accounting for 1,503 tons. And finally, we have Latin America and the Caribbean. Jointly, they hold around 614.91 tons. So that's the lay of the land overall. And in terms of the countries which are holding the most reserve, we have the top 10 out here. The very first one is Russian Federation at 26.52 tons, followed by China at 2068 tons, followed by Switzerland at 1040 tons, then Japan at 845 tons, and followed by India at 794 tons. So these are the top 5 that I can see. And when a country increases its gold reserves, it does that because probably it doesn't want to keep reserves in a particular currency. So typically central banks hold multiple currencies in their reserve along with gold. And the major currencies that are usually found in central bank reserves are the euro and the US dollar along with gold. So we'll have to watch this space. And amidst all this, it seems very foolish to have an artificial debt ceiling. Every time there is a Democratic president, the Republicans create a cliffhanger before approving the debt ceiling. This is harming the US dollar and US credibility and reliability steadily and compromising its soft power and lead in geopolitics. So when I talk about US debt ceiling, I just like to give you a bit of background, the way I understand it. When Trump became the president, he decided to give trillions of dollars of tax cut to the top 1%. And at that time, they argued that once we give these tax cuts, then what will happen is the investment by those top 1% is going to generate a lot of employment. The employment is going to generate a lot of productivity, a lot of taxes being paid. And therefore, automatically, the books will get balanced and things would not be bad. And they gave a projection of 4 years or 5 years. So it was very controversial at that time, but they pushed through. And during the entire Trump presidency, the Democrats did not want to hold the debt ceiling hostage. So they kept on clearing. So right now, the debt ceiling that we have includes a total 25% jump in debt of US compared to where it was before Trump became president. So 25% of the entire US debt was created during the Trump presidency. And the debt ceiling that the government wants to, the White House wants to get approved right now includes paying for those 25% increase that happened during the Trump presidency. So as a result of this, when you look at the kind of proposals that are being put forward by Republicans, knowing that it's going to be a non-starter and that it's going to hurt a lot of households. It seems that this debt ceiling problem is going to be running right up to the wire, right up to the last minute. And at this point of time, I don't feel confident that the debt ceiling is going to be increased. I can't take it as a given because this particular House majority has done a lot of things that we never thought was possible in the United States, and they have done it. So I can't rule it out that they may actually hold up the debt ceiling for 3 or 4 days. So when the debt ceiling is not approved and the government runs out of money, the first people who will be affected is going to be all the government employees, whatever role they are doing, whether it's for postal service or whether it is for providing any kind of facilities for pensions or whatever. All those government employees are not going to get salaries. At one point of time, I remember the government employees had worked without salary for 5 or 6 days, if I'm not mistaken. I don't recollect when that happened. But things have happened like that. But at this point of time, there is talk of the BRICS currency, and there is a lot of people who are rebelling against the US dollar. We also have cryptocurrencies at this point of time, which, like especially Bitcoin, is a good contender for at least a portion of the global reserve. So there is a lot of alternatives now available. And with the geopolitical split the way it is, and with so many countries under sanction, there is a block of countries which are under sanction who are trying to get together and form an alternate currency which can become reserve. And countries are going for currency to currency trades. For example, India is lining up around 19 or 20 countries which will trade directly with India in Indian rupees. China has also lined up yuan trades with other countries. So there's a lot of bilateral agreements taking place to bypass the US dollar. So US is likely to lose its soft power. And now coming back to genomic investors like us, this is the worst case scenario for genomic investors, because if the US dollar becomes weak, then the money is going to flow out of US and go into other currencies which are stronger and which are better. So at this point of time, we have had a 25 basis point increase in the interest rate. So naturally, the dollar is going to strengthen a little bit, but it will be old news by the time that the debt ceiling comes to fruition. And at that point of time, if the US dollar is interest rate is going to be hiked, if the US interest rate is going to be hiked, I think we'll be heading towards a recession. And if the debt ceiling is not increased, then the US dollar is going to fall weak. So imports into US will also become expensive, and the interest rate hike will be met with increase in price due to imports becoming expensive. So it's all going to become very messy, and the quantitative tightening efforts will become counterproductive. Then it will be a political hot potato, because the ordinary people will be saying that our cost of living is going up, rents are going up, food prices are going up, and the government will have to do something, and they won't have any tools in their hands. So that's my concern. So hopefully we have the debt ceiling sorted out in time, and we have a stable stock market. On my part, I'm going to be putting some calls wherever possible if I get some premium, where I have any positive balance. I have a few green stocks in my portfolio, so I'd be looking to hedge them by going in for calls. And yeah, I have some US dollars left, maybe $1,000 or something from a previous overseas travel. So tomorrow I'm going to go and put it into the bank and get it into Canadian. So that's my strategy. Please put your comments. Those who are living in the US, you know things much better, what's happening inside the US. This is the outside perspective. So give me your perspectives in the comments. What do you think of the US dollar? And what do you think of the debt ceiling? Do you think the House will cooperate and pass a debt ceiling limit maybe on the last minute? So I would like to hear your opinion, because you may be from red state, you may be from blue state, you may have different political persuasion. I would like to hear from all of you, because as investors, we are not looking at red and blue. We are looking at green. As Rupert Murdoch said, we want the money. So I would like to hear from both sides, and please put it in the comments and educate me on what's happening in the US. Thanks, and have a great day. Bye for now.